Hello and welcome to this Mutual Fund Corner special. I'm Pavitra Parekh, and today we have a very special episode lined up for you because we're going to talk all about investing in international funds. You know, this is a question we get very often, that why should you look only within your country, right? There are so many opportunities outside, and what if you want to try and play some of them? So to take all of your questions on this, we have a guest joining us. We have Kirtan Shah joining us. He's founder and CEO at Credence Wealth Advisors joining us now. Kirtan, it's always a pleasure to have you on. So thank you for taking out the time and, spending it with us on this show. So my first question on international funds is that what do you see as the key, advantage over here? Of course, it helps you diversify, but for someone getting in, take us through the main pros of getting into, international funds.
Hi, Pavitra. Thank you so much for having me on the show. I think, Pavitra, first, the most important part, at least in my opinion, is to demystify this concept of investing internationally. Because today, while I talk to a lot of people, for them, international investing is largely about investing in the US, and that's not how you should really look at investing internationally. Largely, as an investor, first you will have to, kind of break down international investing into investing in the developed country and developing country. While I say developed, we've got multiple options across the US, UK, Europe, Japan that you can really invest in. And while we talk about developing, of course, there is India, but there is China, Brazil, etc. also that you can invest. So the first thing that I really want investors to understand that investing internationally is not US. There are a lot of other options outside of US. What are the larger advantages, Pavitra, in my opinion? Let me start with discussing three of those with you first. Of course, geographical diversification, I think that adds a lot of value to the overall portfolio because there are situations where your domestic market is probably not doing as well as the international markets are, or your domestic market is underperforming global markets. I think that is one time where global investing or having exposure to international funds have definitely added a far more balance to the portfolio. You look at 19, 20, 2021, I think global funds have done much better than what India did. And that was the time where you actually realized that international investing brought in that balancing flavor to the portfolio. Second is thematic investing, Pavitra. I think there are a lot of these themes that you can't really play in India as a domestic market, right? So if you want to invest in these very large global IT companies from the worlds of Googles and Apples and all of that, right? You can't do that based out of India is because they are not listed in India, right? Or let's say if you want to really go big on the EV space or the battery space, you will largely have these manufacturers dominating global markets based out of China. So I think there are a lot of these themes that you can't really play using India as a domestic market, which is why I think international investing can add a flavor. And I think the biggest reason for me to do international investing, apart from these two that I spoke to you of, is rupee depreciation.
Yeah.
Now you look at the history of rupee versus the dollar, and we've seen rupee on an average depreciating 3 to 4%, right? Now, what that ideally does is even if the markets have not moved at all, but just that the rupee depreciates 4% each year, you keep making that 4% year over year. So as long as you think that the rupee is going to be in a trajectory where it is going to keep appreciating, that depreciation in rupee will keep getting added to your returns, Pavitra.
Oh, absolutely. Those are some very good points. And I guess that's why so many people do look to, try and get into international investing as well. But Kirtan, this is not without its own set of risks, right? Because international investing, in its sense, really has all of the risks of investing in the domestic market. Plus, it has a political risk, an economic risk, a currency risk, like you pointed out. Do you want to take us through what you see as the main cons of getting into international investing?
Pavitra, I think the biggest problem is the know-how. Now, what I mean by know-how is that we are sitting some thousands of miles away from where we are actually trying to invest. Let's say you think the COVID played out and commodity, or probably let's say COVID is resurfacing and you think commodity will be a big major theme that you really want to play. And what better than being able to do it in Brazil? But let's say if you really want to play that theme and play Brazil, you would also want to know whether or not the rainfall there is good or bad. And for a retail investor or even for somebody who's very sophisticated, I think a lot of these things are so difficult for us to really be able to phantom while we are trying to do investing globally. So I think the biggest challenge of con for me is first the know-how of the economy or the country, where for a lot of reasons it's not as easy as for us to get the data and be able to interpret that.
Yeah.
I think second, very importantly, is of course the reverse of the currency advantage that I spoke to you of. Let's say rupee at 80 to 50, and you try and invest at this point in time, but for the next 1 year, 2 year, 3 year, you might see that the rupee, instead of depreciating, what has happened historically, the rupee starts appreciating. So what happens is, even if you made returns in the global markets, but the rupee appreciate, your return is going to fall by that percentage by which the rupee is appreciated. I think the bigger problem also is political risk. We've seen what happened in China, let's say, for example, right? What have they really ended up doing to the pharma sector, the steel sector, the education sector? There's so much of political risk globally that you and I would typically find it so difficult to be able to abreast ourselves with. Even if you look at as simple as Japan, right? The change in the helm of things at their central bank is creating ripples globally. So there is so much of this political or probably, RBI, Fed kind of central bank related changes that happen, that at the macro level makes a lot of impactful change on the investments that we are making. So these are some definite problems while we are trying to invest in the global markets.
Okay, that makes a lot of sense. That there are so many of these additional risks compared to if you were just investing in the domestic markets. Kirtan, in that context, do you think that this is something that you should only look at if perhaps you have some experience in the markets, you've been around for a while? Do you suggest that new investors should maybe stay away from this kind of investing?
I think, Pavitra, what I would really the way I would like to look at this is, if you are a sophisticated investor and you've been investing for quite some time and you understand all of these challenges that we spoke of, you can definitely have some allocation to global markets, right? But largely as a domestic investor, you look at India, I don't see a reason why there is any other economy that is going to grow at a pace faster than India, probably in the next 5 years or a decade or so. So if the Indian economy is going to grow at that pace, right, why not have most of your money invested in the Indian economy and try and leverage the growth that India is going to expect in the future? But of course, from all of these other things that we spoke of the advantage in terms of diversification or in terms of rupee depreciation and all, you can definitely have some exposure. But don't try and take these exposure to economies like China, Brazil, Japan, because a lot of these are not largely covered. A lot of these markets are very restricted. Not a lot of information is available, right? So I would be okay doing a 10% in, let's say, a US and 90% in India, rather than trying to complicate my portfolio by adding a lot of Brazil or Japan or China.
Oh, absolutely. That makes sense. And this is something we've spoken about before as well, right? Some of these economies are perhaps better stayed away from, at least in the current context. Kirtan, very quickly, do you think there's a certain minimum time horizon that you should have when you're looking at international funds? I mean, I know we talk about it all the time for mutual funds as well, that please don't get in with a very short time horizon. That's not going to help your case. But, more so for international funds, when there are these additional risks, do you think there's a minimum time frame you should mentally be ready for?
So, Pavitra, there are two ways of looking at it. First is the tax aspect, and the other is the minimum time horizon that you really need from an investment standpoint. So at any point in time, you can't enter, or you rather should not enter international investing with a thought process of investing for less than 3 years. Because while you do international investing, you are taxed like a debt fund is. So only if you stay invested for more than 3 years is where you will get the indexation advantage, and hence a slight advantage on the tax aspect. You do anything less than 3 years, it'll get added to your tax slabs, right? So from a tax concept, minimum 3 years, but I would really like to look at international investing more like a mid-cap investing in India. So let's say if I have to invest in the US today, I would look at it equivalent to investing in the mid-cap category in India, right? So I would not look at anything less than 5 years if I really want to invest in matured markets. But if you really want to invest in, let's say, economies like Brazil and China, you should not do that for anything less than 7 or 8 years.
Yeah.
At least that's the way I look at it.
Yeah, I mean, that could help really cut your risk by a lot, right? And just add comfort to your investments. But Kirtan, with that, we're going to wind down on this edition. Thank you very much for joining us and taking us through this complete explainer of how you can go about investing in international markets as well as the pros and cons. Thank you very much. And with that, we're going to wind down on this edition of Mutual Fund Corner.